As of the latest market session, Tilray Brands, trading under ticker symbol TLRY on the Nasdaq, closed at $4.64, with pre-market trading pointing around $4.69, marking a modest uptick of roughly 3.3% from its previous close. If you were checking your trading terminal before the opening bell, the market for Tilray is currently closed, but the price action leading into today reveals a fascinating tension. Wall Street has spent years treating Tilray Brands as a pure-play cannabis speculative gamble that lives and dies on the whims of Capitol Hill legislation. The market narrative insists that until federal rescheduling or full legalization happens in the United States, this stock is essentially trapped in a perpetual cycle of hype and brutal sell-offs. But if you look beneath the surface of the latest price movement, the reality on the ground tells a radically different story. Tilray has spent the past few years executing a silent structural shift away from pure reliance on Canadian adult-use cannabis, building out an extensive craft beverage footprint across North America. While retail traders are sitting around waiting for political headlines, institutional capital is quietly evaluating Tilray as a diversified consumer packaged goods company disguised as a penny stock. The gap between what retail buyers expect and what the balance sheet reflects is where the real trading opportunity lives. When retail investors open up the Robinhood app or log into their Robinhood stock trading accounts to check their Robinhood investments, they often group Tilray alongside speculative tech or volatile meme assets like Tesla stock, Apple stock, or Nvidia stock. They see a stock that hit historic highs years ago and has spent most of its existence drifting lower, leading many to believe the business is completely stagnant. The reality is that Tilray has been aggressively absorbing craft beer, beverage brands, and wellness operations to create a massive distribution engine that generates cash flow regardless of when federal cannabis reform occurs in Washington. This gap between the public perception of a failing pot stock and the operational reality of an expanding beverage and medical distributor creates a unique setup for anyone engaging in online investing or searching for serious investment help across popular investing sites. Looking at the immediate trading dynamics over recent sessions, volume trends show an intriguing shift in institutional sentiment. Average daily trading volume has fluctuated sharply following the company's recent earnings print, where top-line revenues hit record figures near $915 million, yet net bottom-line losses reminded investors of the ongoing friction in global cannabis operations. Short interest remains elevated across major trading platforms, which creates sharp, explosive squeezes whenever positive macroeconomic news trickles out. Active traders utilizing interactive brokers trading tools or monitoring order flows through an interactive brokers platform have noticed distinct blocks of accumulation during heavy dip days. When broader markets experience volatility, retail capital often flees micro-cap equities, but institutional buyers using individual brokerage accounts and sophisticated execution algorithms have been steadying the bid around critical support zones. Sector momentum in the cannabis space has been notoriously unpredictable, heavily influenced by regulatory delays and state-level taxation hurdles. However, Tilray's unique position allows it to absorb macroeconomic pressures far better than single-state operators in the United States or pure-play Canadian cultivators who lack scale. When interest rates stay elevated or consumer spending tightening hits discretionary purchases, Tilray's craft beer and spirit brands provide a stable revenue foundation. Retail investors using SoFi Active Investing or managing portfolios through SoFi Invest often treat SoFi stocks like uniform risk assets, but analyzing Tilray requires splitting the business into separate operating units. The market currently prices the entire company at a fraction of its total sales, effectively discounting the growth potential of its international medical cannabis exports to Europe, particularly Germany, where recent regulatory shifts have expanded access for prescription patients. To understand how Tilray arrived at this juncture, it helps to examine the core business model that Chairman and CEO Irwin Simon has constructed over recent years. Tilray Brands operates across four main divisions: adult use and medical cannabis, craft beverages and spirits, European pharmaceutical distribution, and hemp-based wellness foods. Through legacy acquisitions, including the historic combination with Afria, Tilray built massive cultivation and processing facilities in Canada, Portugal, and Germany. But recognizing the structural challenges of the Canadian cannabis market, namely oversupply, heavy taxation, and price compression, management pivoted toward acquiring established craft beer brands like Sweetwater, Breckenridge Brewery, 10 Barrel, and Montauk Brewing. Today, Tilray stands as one of the largest craft beer producers in the United States, giving them an established distribution infrastructure ready-made for THC-infused beverages the second federal law permits them. For long-term investors managing their portfolios through Schwab Intelligent Portfolios or running a self-directed intelligent portfolio, evaluating Tilray comes down to capital allocation and debt management. Past financial reports painted a challenging picture dominated by non-cash impairment charges, share issuance, and net losses that burned through cash. Equity dilution historically was the primary complaint among retail traders discussing the stock on forums or managing their positions via Fidelity Wealth Management and Fidelity brokerage accounts. Management used share issuance to clean up the balance sheet, pay down expensive debt, and acquire revenue-generating alcohol assets. While dilution hurts short-term share prices, it also removed immediate bankruptcy risks that plagued many smaller competitors, leaving Tilray as one of the last mega-cap entities standing in the industry. If you are engaging in self-investing or setting up long-term holdings through Fidelity IRAs or the Fidelity mobile app, it is vital to assess how Tilray fits into a broader growth or speculative bucket. Comment below how many shares of Tilray Brands you currently hold in your portfolio and whether you are holding for craft beverages or cannabis reform. Looking ahead, the future outlook for Tilray depends on several distinct catalysts that could force Wall Street to reprice the stock entirely. The most obvious catalyst remains regulatory movement in Washington, specifically potential rescheduling of cannabis by federal authorities, which would eliminate punitive tax burdens like Section 280E for U.S. operators and open the door for cross-border institutional capital. However, waiting solely on politicians is a risky strategy. The real fundamental catalyst lies in margin expansion within Tilray's beverage and European pharmaceutical segments. As international medical cannabis adoption accelerates across European countries, Tilray's high-margin EU GMP-certified facilities in Portugal and Germany could begin generating substantial operational cash flow. Furthermore, if the company successfully integrates its vast craft beer ecosystem and ramps up regional distribution, the cash flow generated from alcohol sales could fully fund its cannabis R&D without requiring further equity dilution. The key risk factors cannot be ignored by anyone using an Interactive Brokers account or placing trades on the Robinhood app. Persistent legal barriers in the United States could keep institutional capital locked out of direct equity investment for longer than expected. Furthermore, intense competition in craft beer and adult-use cannabis keep pricing power low, forcing Tilray to spend heavily on marketing and product differentiation. If consumer spending contracts significantly, craft beverage margins could compress alongside cannabis sales, putting pressure on management to demonstrate clear net profitability for equity holders. In summary, the ongoing narrative surrounding Tilray Brands continues to mistake a transforming consumer packaged goods business for a failing single-topic penny stock. The market expectation views Tilray as a helpless passenger dependent on government decisions, leading to extreme price volatility and widespread skepticism among retail traders on popular investing sites. The reality revealed by recent operational moves, international expansion, and beverage large acquisitions shows a management team actively insulating the business from political inaction while building a distribution infrastructure for long-term scale. Whether you trade through SoFi Robo-Advisor, manage your own positions on Robinhood stock trading, or utilize interactive brokers' fee schedules to execute tactical trades, Tilray represents a textbook study in market expectations clashing against underlying business transformation. As institutional volume accumulates and the operational bridge between alcohol and cannabis strengthens, the stock stands as a primary benchmark for the entire industry.